Yo guys, I hope you all are doing well. Had a great week. Last week was there were good moves as well, and enjoying your weekend. So this is actually going to talk about next topic. It's most awaited topic. So many of you DM me on Instagram, saying okay when this is coming, commented on the videos. Okay, I actually was busy with other stuffs. There are so many things going on at the moment, so couldn't able to record. So here we go. So today we are releasing this trading models. What do you mean trading models and the stuff, right? That was actually topic from the phase 3. So if you guys don't if you are new here and visiting the first time the channel, welcome. And if you are old as well, you go back to our playlist and just watch the video about the trading plan. So they are not the same, so they are different, but so you will get the difference what I'm talking about here right now. And if you are brand new, so feel free to subscribe and like the channel. So here we are doing educating the people who cannot afford the hefty fees of the like 1,000 or 2,000 euros, but they are willing to put time and effort. They're just missing the knowledge. Okay, so here I am sharing this. Okay, and feel free to like it and share it to the people who are in the same field. And we are trading here predominantly forex, but it can be used on any kind of chart, which is having the candlestick graphs, right? So the concepts and principles are same, it's just different chart, right? So here I'm educating the people with the smart money concept. So how the hedge funds and the other big banks trades, and how we can ride with them instead of taking trade opposite direction, right? Okay, so other than this, let's get started with this. Okay, trading plan and trading models. Okay, they are both different things, they are not the same. Okay, so typically you should have the clear-cut trade plan. Actually, if you watch throughout videos, you should have written plan, and you should follow that plan, otherwise it's not going to work. Okay, if you have a plan and you're not following, that's where journaling comes into the picture. So why you journal the trades? So you want to know you are following your plan or not, right? So if you're not following plan, I guarantee you're not going to last 90 days in the market, more than 90 days. Yeah, so you should have a concrete plan, and more importantly, you should follow that plan. And there will be the times like there will be some impulses, and you're taking trade that is not in your plan, and you need to avoid such situation. That's why journaling is very important. So you will know, okay, so this is where I need to stop, right? It will come with experience, but you will get it. Okay, so it's not that easy to conquer. Okay, so typical plan that I already explained in the video, what should have in that plan, like so let's say for example a time of a trade. So let's say for your scalping or your intraday or your swing, no matter. So time of a trade, time of entry will decide you. Okay, so let's say I am only trading New York open, couple of hours in the New York, and then I'm not looking into charts. Yeah, so follow that principle or the plan to the teeth, very, very strict. So let's say you have a plan, tested it, and it worked. So you need to follow that to the very strict, and you shouldn't deviate from that. So the first thing is a time of entry, about the risk, like let's say you're taking a 0.5% risk or 1% risk or 2% risk if you have a small account per trade. And your daily risk limit, let's say 2 trades. Let's say, for example, you're taking 1% risk. If you are 2%, if you lost 2 trades in a day or 3 trades in a day, so you're going to close the machine and you're going to do your all the stuff and come back with a fresh mind tomorrow, right? Yeah, so it will determine your success. If you have a solid plan and you are following that plan, that is detrimental to your success in the trading. Okay, now and also typical, like what kind of trader you are. For example, if you are scalping or you're doing intraday trades which last like a few hours to a day, or the swing trades which last few days to a week, right? So you need to decide for yourself. You can be all of them, but I would say go one by one. Okay, so don't try all of things, because it's gonna be chaos, and you it will be harder to find the mistakes. Okay, why this is failing and stuff, right? Okay, but anyway, look, so this is typical trading plan. And so let's talk about the trading models. They are not the same. So what in the trading models, what you're looking into the market each and every single day is a specific thing. Okay, so let's say you come into tomorrow. Okay, do I see this in the market? Okay, no, let's go. I'm not trading today, we'll come back tomorrow. Do I see this tomorrow in the when I come back tomorrow into market, and in market hours, let's say I'm only trading New York, do I see this type of things in today? So no, so you're not taking trades. So that's where the models comes into picture. So there will be a point it will come where it will so ingrained in your brain, so it will be like automatic, like you will get it. So okay, so this is what I'm trying to see in the market, it's not there, I'm not taking trade. Okay, so this is what I'm trading. Oh, I see this, what I'm looking for, I'm taking trade. So it will become a habit after some point of time. So, and it will be at that point of time, it will be just easy. Okay, so you will feel, okay, why is this even legal like this? Okay, so this is so important. It will take some time and you will be tested. Okay, it's not easy to conquer all of this unless you have very strong mind and you have control on yourself, right? So human minds sometimes will not always help you. So yeah, I mean, it's a psychology topic, but I'm not gonna touch it. But so you know what I mean after seeing some screen time and the stuff, right? So so predominantly there are 3 models, right? So I'm gonna today share my models. So I will request you, do not copy as it is, because it may not work for you. Okay, you need to find it for yourself. Okay, take it as a baseline, or the starting point, and build upon that your own model. Okay, and you shouldn't have more than 2 models, or you should have only one model and see the success for a month. If you're getting a success, stick to that. Okay, and then add after some time another model. Okay, so let's say if you have 5-6 models and you're not getting success, so that's not going to work. Like one step at a time. Okay, that's our channel name, one step ahead, one step at a time, right? So you need to have at least 2 models, or maximum, sorry, not at least, but maximum 2 when you are starting now. Okay, or when you're beginners. Okay, you shouldn't be having more than 2. And I would say if you're a beginner, go with only 1 and stick to that. Then you will find your consistency. Okay, and then add another one, right? So this is about introduction, what is trading plan and trading model, and what is the difference between them. So we'll go into deeper with the models, right? So let's talk about the swing model now, right? So there you go, swing model. Okay, I don't know, right? Okay, right. So typical, this is what I look into the market. Okay, whenever I do weekly forecast and the stubs, we want to see this kind of stuff on our chart, right? So the type 1 into the swing. Okay, swing model, I have a plenty of example in the previous videos, how the swing model will be look like. You can go back after watching this video, right? But typically, so what's directional bias for the swing model is H4 plus, H4 and above. Like you can have H4, H10, H12, or daily. Okay, go to the day. Okay, don't go, you can go at least 2 day or stuff, but that's kind of a positional. They're gonna take time, right? So we are here kind of day traders, right? So we were trying to find an opportunity for every single day or week, right? So I would say stick to the H4 and D daily time frame, and then take it from there. Okay, so what I'm gonna looking for this kind of stuff. Okay, so let's say market is coming from bullish market, the breaking structure here, break up structure, and suddenly I see, okay, now we got a break up structure downward. Okay, so this is a possible, there are two possible things. Either this will be the liquidity grab and it will break like this, or it will be a possible change of trend, right? So for possible, it will mitigate here and then it will happen, and then okay, so there are two possibilities here. Okay, so it will either this will termed as a liquidity grab, or it will break this high, or it will mitigate this OB and break the new structure. So we'll have possible trend change of trend, right? So what I'm looking here, okay, so once we have this break of structure, so we have this order block to play. Okay, so this is if you remember, I have a video, which order block will hold, where I discuss the probability of the order block. Okay, you can go back to that video and see. Okay, this will be the less probable, but we will make it higher probable with confirmation and confirmation within confirmation. Yeah, so because this is H4 and daily, there will be plenty of time when the price here to confirm, okay, it's gonna up or down in that zone. Okay, for example, let's say there are two possibilities here. Okay, let's say they have this OB anyhow marked as open and the 50%. So you can have rule, okay, you can only trade open or 50% or both. Okay, yeah, so let's say what I mean confirmation on the 1 to 5 minutes. Okay, so if you know our confirmation model or entry model, if you don't know, you can go back to the videos, entries about entries, and there I explain what type of entries you are looking for. So for example, this type of model, so what I'm looking, actually, let's say price touch open, so I will be looking like this. Okay, the price touch here, two breaks of structures, which is our confirmation model, right? So two breaks of structure with mitigation, that will be the higher probable, because once we have mitigation, point of mitigation, then we have point of invalidation, and where you can put your safely the stops above that invalidation point, right? Now, so confirmation I'm looking for is from 1 to 5 minutes. Yeah, so what I'm looking here, let's say this is H4, the point of interest is H4, and the price touch here. So I'm going to time frame, let's say 1 minute, if I see two breaks of structure here with mitigation or not. All right, if I don't see on the 1 minute, or if I see 3-4 breaks of structure on 1 minute, so I will go up 2 minutes, 3 minutes, 4 minutes, 5 minutes. Okay, I want to see here once this price touch 1 break, 2 breaks, so I will be entering from here. We have invalidation here, right? So if this doesn't give me, just like price touch and run away, then it let it go. Okay, so I'm not entering there. So but there will be plenty of time here, so to confirm on this open or on 50%. So let's say sometimes it happen, it will give some reaction and then it will come to 50% and then it will go down. Yeah, so you need to consider both passive possibilities, either from open or 50%, or there are third possibility as well, like it will take liquidity and then go. But you will get it. Okay, so when which thing and what thing is gonna happen. Okay, so first thing first. Okay, so what we're gonna look for here, when the price come here, okay, time frame 1 to 5, right? This is one thing, and then it may happen like you shouldn't, if it doesn't get your follow through, it comes like this on 50%, then I can look for entry on the 50%, and then it will go for this. And and if the 50% is not there, and then you just take the liquidity, and if you get this, then also took the entry from there. Okay, so this is our confirmation model. But if we have only one point of one break of structure here on the 4 hour, so this will be the less probable. Okay, so I will be looking for here confirmation within confirmation. So what I mean confirmation within confirmation, let's say you got it here. Okay, on 50% you get break of structure here and here. Okay, now we have this point of interest here, or this is your order block. Okay, so what I'm going to do when the price go back here, I'm going to go to 15 second to a 1 minute, again look 2 breaks of structure here. This will be the higher probable than only just 2 breaks of structure. And then you can have the, if you don't have the mitigation, your stop should be the above first break of structure, just to be safer, right? Because price may come there and mitigate that order block and come back. So this is a one that I follow. Okay, type 1 and type 2. I will explain type 2. Okay, so this, if you remember, this is a low probable, but we made higher probable with confirmation here and confirmation here on lower time frame. So there will be plenty of time, because this is H4 POI. Okay, the price not gonna be just touch and flow like that. I mean, it doesn't work like that, So price, there will be the break of structure, mitigation, transition of order flow, and then new break of structure. Okay, so this is one of the predominant thing I look into the market, and this is so ingrained, like you will know. For example, I think it happened on the British pound actually last week on the 1 hour probably. Let me see. Yeah, so I think I explained this one 1 hour or 4 hour or something. Yeah, 4 hour, I guess. Yeah, so see, price is coming up here, and we have first break of structure, and we have this order block. Yeah, so there will be plenty of time here to confirm, and within confirm to go short and break the new break of structure. So this is an example of that. All right, so you need to know what to look for into the market. So this is actually kind of type 1 for me to look into the model. Yeah, so I will repeat. Okay, so what you're going to look into the type 1. So type 1 will be the possible change of trend, so we don't know yet. And confirmation on the POI, you're going to look for 1, 2, 3, 4, 5 minutes confirmation model, and 1 to 15 second or 15 second to 1 minute confirmation within that confirmation. So there will be like you're confirming here, being cautious, because we don't know this is liquidity grab or it just change of trend, right? So it's better let it miss than the hitting stop loss and entering with FOMO, fear of missing out. Okay, that's not gonna work like this. Okay, so this is type 1 that I look to see into the market. And let's talk about the type 2 for swing model. We have plenty of example explained in the previous videos. Go back and there see, right? Now, so type 2 is a similar, so but we have 2 breaks of structure. Okay, now here what I'm looking for is to is an order flow. Again, directional bias is H4 plus H4 to a daily, right? So the price is coming up from the down here, and if you see first break of structure, which is a possible change of trend, right? And then you see mitigation of that order block and new breaks of structure. So here order flow is established because this mitigation led to new break of structure, right? So this is what I'm looking, order flow. Order flow is very important. It doesn't matter which time frame you are trading. If you have order flow in place, your probability of trade is more than any other kind of break of structures. So just look for this kind of stuff. Okay, the first break of structure, mitigation of that break of structure, and new break. So you can look this kind of pattern on even on this entry as well, like on 5 minute, or looking for 1 minute, 2 minutes here. First break, mitigation, second break. So for that you need to find the correct order block. If you don't know how to find the correct, many of you're finding just any random green or red candle. It's not going to work like that. Okay, so we are here talking about 1, 2, 3 pip stop. So you need to be extremely accurate what you're thinking, and your the process needs to be followed, and the money will come automatically, right? So that's how. Okay, so here is the second type of the swing model that I look. Okay, so let's say if we got order flow in place, yeah, mitigation, and you have clear cut point of interest to play. So this is a 4 hour, let's say 4 hour or daily. So even the price, you can take entry like this here, just from the open, not confirming again here, it will be more probable than this one, because we already confirmed order flow, confirm structure, and change in trend. Transition is happen. Yeah. Now, but here what I try to do, even if this is an order flow and more probable, so I try to confirm here again on with a similar fashion on 1 to 5 minute. Like let's say price come here, and yeah, we are not confirming within confirming here. You just on, let's say on 1 minute I say this, I'll take on the 1 minute. We're not going to be 15 seconds down and again confirming here in this point of interest. So that way you can reduce your stop but it's not needed here because it's already confirmed and you are again confirmed here. So you are basically making your trade more probable here, right? You can do that as well here, but there will be chance to miss your trade, and price just flew, because there will be healthy order flow, and it may happen, like there will be time that you will just miss the trade, right? So this is the second type in the swing model that I am looking. Now here, one thing you need to consider, one more type. Sorry. Okay, here one more type. Right. So if there is no mitigation, right? Let's say like this. So in this case, I generally like this one, this order block rather than this. It may, like, sometimes it can go from here, but I like it to wait for extreme point. Okay, so you can confirm here again and confirm in that confirmation within confirmation. That will also work, but I just keep it simple. Okay, I want to see this, otherwise I'm not taking, or if I taking, I'll taking from extreme point. Okay, so this is pretty much based this is pretty much swing model that I follow. I predominantly look for the swing trades, and so that will determine your longevity, because scalping and scalping and intraday will put you in more riskier than the swing happens few times in a month, but that's where the longevity lies in trading. That's I believe. Okay, now let's talk about the next model, which is intraday model, right? Everything is same, so I'm looking everything same, just directional bias I am deciding from H1 to H3 or H4 or below. So generally I go with H1, but you need to understand here, you need to pick a time frame which is clearer. Okay, because time and price are two different dimensions, so they don't know each other. So price doesn't know time doesn't know price. So whichever makes sense, you can use that time frame. Okay, you can use sometimes M15 as well, that's okay, but don't go below M15. All right, cool. Now this is intraday model, so everything is exactly same, right? So you just directional bias, this time frame will decide directional bias. If you want to trade intraday, this trade will last from few hours to a day. Okay, and yeah, so, and your target point should be the liquidity point, which is this the new low, or the previous low, or equal lows. You know how to find the targets now, because I already explained in other videos where I explain the liquidity and the stuff and the targets. Liquidity is a target. Yeah, every single low and high has liquidity above and below that, so you can target that point. So interestingly, and for the scalp model, all right, scalp model, the difference is directional bias will come from M1 to M5, right? So the M1, so here is the thing. Okay, for scalping, there will be, so you need to here look scalping when the market opens. Let's say if your London opens 8 o'clock here in the morning, so you need to look for scalp 2 hours in that zone, because the liquidity The swept up liquidity comes in that first 2 hours, or New York Open and then 2 hours. For swing, you can take some odd time entries. That's okay. But for scalp, I would highly suggest, if you do not get entry in that 2 hours, you shouldn't be taking your scalping, because in the dead hour, or less liquidity hours, it's most likely you to lose money, because there isn't enough liquidity and the stuff. Also, for the scalping, bear in mind, you need to be quick to put your stops. I mean, trade management stops break even, or your targets will be the next, ideally your next liquidity point, which is next new breakup structure. If you get new breakup structure, then you should remove most of your money. Yeah, because here, when you go lower, for the directional bias, probability go lower as well. Okay, so let's say, for example, like why we do the weekly forecast, because we want to know where you are in the market, right? So for example, this is a 4-hour thing. Let's say go here. Okay, and you take a scalp here. Okay, now you can hold it until this break. So you will get such type of trades in three four types, 3-4 in a month, but not every single scalp will go to new high. Okay, so just keep that in mind. If you get this scalp here, so you can have little volume to hold it until new break structure. Yeah, so everything is same. Okay, so this is a rule based mechanical approach, so you shouldn't be involved any emotion here. Okay, so if you see this, or if you follow your trading plan, and only you enter, otherwise you don't enter. Okay, so this is why you actually you can avoid your, I believe, actually, if you have rule based system, you will less likely to trade impulsively or revenge trade, all the stuff. Okay, you will be more patient during that time, if you have rule based system. So scalping, scalp model, you need to remember two things. Okay, London Open 2 hours, New York Open 2 hours. Okay, so you scalp only in those 2 hours if you get an entry, and that's okay. And your trade management, you should be active on a screen and actively making taking out money from the table, or making a break even and the stop, right? So this was a topic, actually, it was pending since long, that I'm sorry about, but yeah, so I got time this week. So yeah, so other than this, if you have any questions on the trading models, or anything that you would like to comment on this video, or you can DM me Instagram, or I have Telegram channel as well. I do post some charts there as well. You can join that. And I would really appreciate, if you're liking this content, or if you know anyone who into the market, or they want to learn and they don't have money to pay those hefty prices for these courses, uh, you can share this channel to them. And if you are really getting anything from this, or share me your things, how you are benefiting from this content. And is this making some kind of a progress in your journey, or is helping you, and how it is helping you, or are you profitable? If you're not, you can ask me questions in a DM. And you can buy me a coffee as well, if you want to support my work. The buy me coffee link in a description as well. So Yeah, so other than that, I'll take a leave now, and there will be a video coming for weekly outlook as well. Probably tomorrow I'll record it. But other than this, take it easy, trade safely, and Jai Hind.